In this video, I'm going to explain the most important factor that junior commodity traders fail to understand. And it has serious implications because I've seen a lot of talented young professionals just quit what could be a multi-million-dollar career because they did not understand what I'm going to explain. And by the way, if you are a business owner, a manager, an executive, you may want to watch this video to the end, because when a good employee fails to deliver or just quit, honestly, it's mostly on you. So in this video, I will explain this deep issue and come up with a bunch of solutions. Cool? But first, let me give you a little bit more context. I had this idea about this video when I received a bunch of whining WhatsApp messages from one of my former employees complaining about his new job. And it made me remember that I felt kind of the same way when I started trading 15 years ago. I'm going to show you his messages, but to keep his privacy, let's just call him Brutus. So Brutus left one of my company a few months ago for a position as a junior commodity trader in another energy commodity trading company. Then this backstabber little piece of had the audacity to come back to me and ask me for pieces of advice. I'm kidding. I mean, honestly, he was right to take the offer, and I'm a bit bitter that I couldn't compete and keep him. I'm kidding. Anyway, look at our messages. How are you doing over there, sir? Good, and you? Making cool money? Nah, man. Market is up. Working in a corporation is tough. I had an argument with my management for a while now. They don't like that I'm too risky. Laughing emoji, laughing emoji. Lol, how come? I don't know, man. I really need some advice. Ahaha, I don't think I'm suited in the corporate world. What happened? I had problem with the operation manager yesterday. They are bringing it to the boss, think that I'm too risky for the company appetite. What Brutus failed to understand is this: CRP, Company Risk Profile. Each company has a CRP, explicit or implicit. If, as a junior commodity trader, you propose a trade outside the CRP, you'll get booted like Brutus. And seriously, it's tough mentally. You work like a dog day and night during the weekend to try to source a deal, and then when you present it to your hierarchy, they just dismiss it. Then you just whine like Brutus, well, this world isn't for me, blah, blah, blah. But to be perfectly honest with Brutus, it's true that most companies completely and repeatedly fail to clarify which risk they are willing to take and which risk they are not willing to take, which could be quite confusing for our junior commodity traders. And sometimes in small and medium commodity trading firms, the only one that assesses the risk is the owner of the company or the head of desk. And it's not that easy for them to explain what they intuitively know. There are a lot of different risks in international trade, and often the risk-reward ratio is quite difficult to explain as it's a blend of different risks. Let's just review half a dozen of risks for you to better understand what I mean when I'm talking about risks. Market risk, fluctuations in commodity prices. Some commodity companies like to speculate on prices, others don't. Quality risk, variability in the quality of the commodity leading to price adjustment or rejection. To give you an example, cashew nuts are a very fragile commodity, and there is a lot of quality risk with this product. So some companies hate that type of risk and are not ready to trade those type of product. Credit risk, the risk that a counterparty will default on a payment. Credit risk may well be the biggest risk of all. So think about it as a new junior trader. When you bring on the table a deal with a new counterparty that requires you to give him credit, really through it what risk you are asking the company to take. I'll talk more about that risk later in the video. Exchange rate risk, fluctuation in currency's value affecting the cost of trading in different currencies. Again, some companies like to speculate on Forex, while others don't. For instance, if you buy commodity in euro and resell it in US dollar, do you hedge or not? Or if you sell in an exotic currency like the Brazilian real, how do you mitigate the risk of a currency collapse? Compliance risk. Risk of failing to comply with international trading standards and regulation. Those are only a few risks in the world of international trade, and often our CRP is a blend of all those risks. So if you come up with a trade as a junior trader, it could be heavily rejected by your boss, even though it seems like it was a legit one for you. Let me give you a couple of examples. I remember when I was a young dairy trader, I would come up with a new deal to my boss, and basically she would look at it and then she would say, "No, Damien, we don't sell CAD." CAD means cash against document. Cash against document is a payment method where the seller ships the good and sends the document representing the ownership of the good to the buyer's bank through the banking system, and where the delivery of the documents to the buyer is subject to the payment. Okay, that's not really clear. Let's try to do better. Basically, cash against document at site is when you send the documents that allow anyone to pick up the goods to your buyer through a bank channel. The problem with this payment method is that it's very risky. What happens if your buyer doesn't pay for the document, doesn't pick up the document? What do? You have your original document in a bank somewhere, and you have your containers or your shipment stuck in a port. This is the worst situation that can happen to a trading company. So anyway, back to my story. So when I was a young and naive trader, I would come up to my boss with a trade, I was like feeling well about it and so on. I would come up and with a proposal of what is the trade about, like purchasing price, purchasing payment terms, selling price, selling payment terms, transportation quote, and so on. I would have done my homework, and then I arrive with my little trade, and then my boss will say like, "No, we don't sell CAD," and then I will say something extremely stupid, which is like, "I don't really understand because you do a lot of CAD deals, so what can't I do CAD deal?" And then she would look at me and say, "Hey, Damien, this is not the same." And of course, our phone would ring because, every 30 seconds our phone would ring. And yeah, that was it. The conversation was over. And that was the teaching moment for me. So, of course, right now, I completely understand what she meant, because you cannot really compare when you sell CAD to one of your customers that has been your customer for like 20 years to a country that you know very well. You have 10 clients in this country. You know everyone at the port, at the inspection company, at the Ministry of Health. You know this country like the back of your pocket. So, of course, selling CAD is still risky, but if something comes up, you know how to deal with that. For me, my job was to open new countries, to make new trade in West Africa. So we had none of those information about the countries. So if the containers would be stuck at the port, we knew nothing, or it would be a complete different ballgame to resolve that type of solution. So now I'm older, I have gray hair, so I understand all of that. But back in the day, she was maybe one of the best commodity traders I've ever seen, because she was like extremely good at feeling people. She had been doing for 40 years when I was there. So intuitively, she understood everything, but it was even hard for her to explain, no, we don't do this deal. And I was like, okay, why? She said, yeah, because it's obvious it's not going to work. I'm like, no. And then say, yeah, it's not going to work. And then, of course, I reflect on it, and then I understand, okay, in this situation, market was it was a bull market, so I understand why it wouldn't. But so all of that was her immense, huge knowledge that for it was like even an intuition. What is risky enough, what is not risky, what is possible, what is not possible, that has been trained for years and years and years of experiences. But it was also difficult for her to explain all of that, because everything was in her head. So, but anyway, and now let me give you another example, which is way more recent, which is happening right now in our wood pallet business. So, for instance, when the market is trading down, we are not going to sell with risky payment term to new customer, or to customer in a country that we don't really know people there. So for instance, we are extremely good in Romania, We have good clients in Australia. Now Italy, we start to have a better network and so on. So those are countries that we would feel comfortable to sell with not secured payment term. So when we send a truck, the guy can check the quality when the truck arrives and then say, okay, I'm happy with this quality, I pay. It's very dangerous because if the guy is not happy with the quality, what do you do? So we can do those quite risky payment terms only with country that we know. And if there is an issue, we have another client as a backup. We know where the warehouse are. We know, how to find a way out of that mess. But if this is in a country like we don't have right now, like a stronger network, like I don't know, like in France, in north of Europe and so on, if something happened, like, we don't know what to do. We have no client as a backup. We don't know the people there. We don't know what are maybe some rules, regulations about the road and so on. So we could be okay to do payment term at unloading when the market is up because there is way less risk. Because if the guy doesn't want to take the good, you can just wait and the value of your good will go up. So it's way easier to sell. But we cannot take the same type of risk when the market is down. So this is something that are quite sometimes difficult to explain to the team because they are like, yeah, man, we've done this deal like 3 months ago. Why can't we do the same one? This one, I'm like, no, the market is different. We don't do it. And now in my position, in most of my company, I'm the guy that just make sure that we don't take too much risk. And so I'm the bad guy that keep saying like, no, we don't do it. No, we don't do that. No. So they basically hate me, I guess. But it's my money, and my partner money. So we make sure we don't lose it. So yeah, just all of that to explain that the CRP changed within the region, if people knows well the region, if the market goes up, if the market goes down. So everything is always changing in relation to exterior factor. As I explained with those examples, the CRP is moving. This is not static, and there is an explicit CRP, so those are the rules that your risk manager, that your boss gives you, and there's also an implicit CRP. So those are the things that you wouldn't do in that type of market situation, but that you cannot really write as a rule because it makes no sense as everything depends of exterior factors. So now let's discuss what you should do in the Brutus situation or in my situation in the past. But first, before speaking about what you should do, we are going to speak about what you should not do. And for this part of the video, I need to tell you, I'm going to have trouble to keep my emotion in check because this is something very, very close to my heart and to my money. So, so when one of my traders is getting one of his deals rejected by me, because I'm the guy that makes sure that we don't take too much risk, they all gave me this worst answer. All of them gave me this worst answer. And I'm sure that you've done it also. And this is the worst thing that you can do. So basically, they all said, oh yeah, Damien, but if we don't sell like this, or if we don't purchase with this prepayment, or if we don't give credit to that client, and so we are not going to do the deal. So everyone is doing it in this region. Everyone is doing it. So if we want to do deals, man, we need to follow them. There is no way out. But what a f***ing loser answer. I don't care what the other people are doing. I care about the risk that we take. If the others are making extremely stupid decisions, this is their problem. This is their money. You are not going to do something extremely stupid with our money, with our shareholders' money. Okay? And the worst is that you don't even know the risk that the others are taking. Maybe they have some type of leverage over that counterparty that you don't have a clue. Maybe they bribe the guy, or maybe the parent of that dude is someone in the politics that can thank him if they do something stupid. You have no idea about that. So come on. And okay, let's think about it. How much do we make in a trade? Like 4%? Okay, 4%. So let's say that we do something extremely stupid and that we lose everything. We lose 100% of the amount. How many trades do you need to do to recoup this loss? How many trades? Let's ask ChatGPT. To achieve a 100% gain with a 4% gain per trade, you will need to make approximately 18 trades. 18 trades. 18 trades. And how long does it take to do a trade from end to end? 2 months. So this is 36 months. So for 3 years, you need to have a perfect track record and doing trade with 4% margin just to recoup the loss. Just to recoup the loss. Okay? Do you understand that? Do you understand? So for 3 years, you need to work just to make the loss. that you want me to take the risk. Does it sound like a very good idea to do the trade? No? And you know what the worst is, like, if you do that and then you lose 100% and then you need to work for 3 years for nothing, no bonuses, nothing, just to recoup the loss. You know what? You are going to leave this company. And then you are going to do your trader things to another company. And who is going to make up for the loss? I will have to do that because you would have left like a coward. So this is why we don't do this trade. Okay? Okay. So is it clear? So is it clear? So this is why a company would rather miss on trade rather than do and push for stupid trades. Does it make sense? No, I hope so. But now, if you are in a situation where you cannot find a deal that would fit the company's CRP for whatever reason, you have two solutions. Numero uno. The first one is to do your homework. To do the best homework that you've ever done in your entire life. So basically you do your homework and then you go to see the person, whoever is in charge of the company risk profile, and you show him why he needs to give you a shot with this trade. And by doing so, to change the company's CRP. But to give you a concrete example about what I mean by doing your homework, is you need to come up with all the answers, and you need to have checked all the answers with someone when the guy will ask you those questions. Like, yeah, let's take Brutus. Okay, look, Brutus, you want to do this trade? We think it's risky because we don't know this country. We don't know Myanmar. Okay, Myanmar, we don't know Myanmar well. What do we do if the containers are stuck in Myanmar? And then, Brutus, if you have done your homework, you should have called, I don't know, the shipping line in Myanmar, the shipping agent, and ask for the question, what happens if the containers are blocked? And do we need to have the agreement of the consignee to ship the containers back? Yeah, because maybe you don't know that, but in some countries, you need to have the agreement signed of the consignee of the bale to ship containers back. So if the guy wants to, in those countries, it's really easy for him. So maybe you also need to check if there's other potential lead that you can sell the product, if there's a default on your first customer. Maybe you also need to check how to change the document, because again, in some countries, you cannot change the document when the container are touched the port, and so on. So there's like a dozen points that you need to check, and you need to have spoken with people that are the answers. And I'm sorry, those answers are not on the internet. So if you have done your homework and you have looked at all the that could happen with this trade, and you have some type of solution for that, then maybe you can change your company risk profile. So to sum up the solution number one, as a junior trader, you need to do your homework to gather knowledge that the company doesn't have to expand the company CRP. In short, the first solution is to do whatever it takes to move the company's CRP toward your deal. Now let's review the second solution, numero due. Here is the second solution. You move your counterparties to your CRP. Here is a concrete example. So my boss used to say, Damien, we don't give credit to our first customer. If this is a new customer, he needs to prepay 20%. That's it. We don't deal with people that don't prepay 20% for their first trade. That's the rule. You cannot diverge. That's the rule. And I'm telling you, that was an horrible rule, horrible one, because I was in charge of West Africa, and there everyone used their suppliers as a bank. Everyone have like 60 days credit to pay, 90 days credit to pay. And this is how business is done there. If you deal with a big company, they have a credit insurance, and then the credit insurance allow the supplier to give them 60 days, 90 days to pay. But for my boss, she said like, look, Damien, you need to have your customer, even this is the biggest company of the country, they need to pay 20% with the first deal. And yeah, that was not easy. That was not easy. But you know what? I did it. I succeeded. I made some major players agreed to do our first trial containers, our first trial shipment with 20% prepayment. Seriously, I did it, So it's possible. It's definitely possible. At the end of the day, everything is possible if you are good enough. This rule made my job so hard, but I succeeded. And you know what? It made me. I became a real merchant. Someone able to make a counterparties bend the rules just to work with me. So for all the junior commodity traders that want to cry like a baby, like Brutus, Man, everything is on you, man. It's on you to bend the reality to close deals. And for all the executives that are watching, please spend 5 minutes with your juniors, traders, just to explain like what you expect of them. That's it for me today. I hope that you liked the video. Please leave a comment below if you don't agree with me, if you agree with me, if you have something to say, please leave a comment. I read all of them. And also, if you want to break into the commodity trading world, check the first link in the description below. You will end up on the Shipping and Commodity Academy. Ciao.